is moving higher and it makes its B low in the all period wherever, and then it trends higher again and makes its top and then falls lower, then it generally means that C is going to be higher than where it began. Now you're probably thinking, well, each of these lows here got higher, and that's because we're in a bull market. If you look at the period of this midpoint, which is B, and you see that the top occurred here, that the top occurring here, that generally tells you that from A, which is over here, A, to C, it's going to be higher. Okay? It's not going to be lower. So if you can see that the market is moving higher after the midpoint, that'll indicate that toward the end of the cycle, that low that occurred is going to be higher than where it began. So now you have a bit of a problem here, right? I'm going to now clean up this chart, completely clean it up. One at a time. I thought I could delete them. All right. Can I get you your questions in a second? All right. So now you have a problem. We've got this breakaway runaway. It's actually accelerated at an incredibly fast rate. If this market tops out, I'm not saying it's going to now, it could top out in a month or two or in 6 months. So if it keeps trending up, remember this all period doesn't actually activate until May next year. So anytime between now and May next year, if this sort of tops out really, really high and then falls into its low and then doesn't actually get any higher than the top that it made, that's going to tell you that by 2030, this bank share has a very high chance of coming down to these levels again. Okay, it wasn't able to break this top that occurred here, and it trended lower and lower over time, and not to that magnitude or degree over that short period of time, but it could then spend the next, 2.5 years just trending down, 3 years trending down. That is a real possibility if this blow away top occurs and it can't actually break it again after 2026. Why is that important? Well, for those of you who are coming next week, 2026 is our end of 18.6-year cycle. Okay. So right now what we're doing is we're looking at an 8-year cycle, or 7.8-year cycle, I should say. But there's actually a bigger cycle, and it's 18.6 years. Okay. So the bigger the cycle, the stronger the cycle, the bigger the magnitude or bigger effect of that particular cycle on the market.